Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your end of the day financial market wrap up for this Tuesday, January 8th, 2019. And we're about 4:10 p.m. So you're looking at the settlement prices behind me. Now, I got to tell you, your problem in stock indices, maybe some of the other financials, I doubt that the grains and markets like that, is going to be what does the president do or doesn't do tonight. I don't think anybody has an idea. I know I personally like the idea that he goes and declares the emergency. Then people get paid on Friday, so you don't get TSA walking off. You don't have people worrying about their rents, so on and so forth. I don't know what politically he's doing. He's been very quiet today, but the market is going to react to it one way or the other come 8 o'clock tonight when he starts that 8-minute speech. And then, of course, we'll see what the Democrats do afterwards and how they attack whatever he does, because they have asked for time. Now, if he doesn't do anything with it, they're still going to come out no matter what he does. He's in a no-win position against the Democrats, but for his candidacy and for his constituents, I'm just wondering if the emergency action isn't it. As you can see in the energy markets, we keep hearing about more and more cuts going on in OPEC production and some non-OPEC production, and that is leading some credence to this market. In addition, it doesn't hurt seeing the stock market day after day right now coming off those lows and adding to the gains. So that's one thing. Bonds and notes, you're watching yields creep back up. That's important. They're not soaring, they're creeping. The higher dollar today weighed a bit on the metal markets, and we're going to find out if we're making any further progress on Chinese trade. We're in our third day. It was originally a 2-day setup, but it's fluid, and that's a good sign that we're still talking. Now, when you look at this market on a closing basis, as I said yesterday, it's still, you haven't taken out a previous rally high, but you can see the patterns that you got spike high lows and each one's lower than the previous one. You can see how the rally's coming up, and what I probably should do for us is put on some Fibonacci numbers again. I've got to figure out where I'd want to take them from and see where they're at, but we're probably in about a third of a retracement from the most recent high levels here down. I'm not a Fibonacci artist. And I believe that's an art. I am more with the stuff that I use, and what I'm seeing in the market is a pattern of higher lows and higher highs, which is bullish. An uptrend is defined as higher lows, higher highs. The risk associated with the trend is taking out the most recent low of 2438.50. Given that the market is trading at 2572, that's roughly what, 134 points away. It's a heck of a break to take it out, but that's what it would take to break that pattern. The market yesterday closed over the 18-day average of closes, and it added to that today. So now the support is the 18-day average in theory, back at the 25, let's call it 25.18 level to just round it out. You can see that the first resistance, as seen by a Bollinger Band or upper moving averages right here, they're pretty far away. They're at 2668.50. Anything is possible after tonight's discussion. We just don't know what's going to be said. As a technician, I'm looking at a market, and I don't worry what the president does or doesn't do. I see an overbought market that's had an extended gain, and the question is, can it get up that other 100 points almost to get to the resistance being overbought? You'd have to get something pretty powerful to make that happen. The odds favor that the market might chop around this 18-day average. NASDAQ's the same. You have the higher lows, higher highs, but you are overbought. Resistance begins, at least the first formidable resistance, at the upper Bollinger Band around the 68.31.5 level, with then the 100-day and the 200-day moving averages way up here at the 70.80 level. In the Dow, overbought, higher lows, higher highs. You can see where that's the 200-day average, that's the 100 and the Bollinger Band. This whole sector, 24,713 to 25,265, full of resistance up there, but that's quite a ways from where you're at. It's 200 points away. So let's not think that it's right around the corner. And in the Russell, the market's been in an uptrend with higher lows, higher highs. It's, as I said, the small U.S., let's call them more defensive plays. And the reason for that is you're not worrying too much about international trade in a lot of those companies. That seems to be still good, but overbought. All of the stock indices are overbought as the VIX cash is oversold in a downtrend. Will it be able to come down to two support levels, 1850 and 1721? But more important, and maybe not getting enough fanfare, is as this comes down, we're taking out that insurance premium, if you will, and volatility's falling off in the market again. And that's one of the things I expected to see. I certainly don't know what the impact of a presidential speech, the first one from the Oval Office, how he's going to handle this border wall issue, maybe the funding. I don't know what's going to happen there, nor does anybody else. In the bonds, you've still got the higher lows, higher highs, but remember, you've lost the embedded reading. And when you lose it, when these numbers that make that up, and you can see them here, get under that 80 level, it's a sign that price and the 18-day average want to make a run at each other. And I'll stand behind what I'm saying. In the 10-year notes, the same thing, and the run is underway, as you can see. So the market lost its upside momentum. It could gain it back off tonight's events, but barring that, I just don't know. Now, in looking at TLT, the market's got a pattern of lower highs, lower lows. It never did get embedded. It just got overbought, and it's in a corrective mode. Support back at that 18-day average. Even if you went up in this market and took out 123.65, you'd have a pattern of a lower low, higher high. In the dollar index, you got a bounce from the areas that we've been talking about. The combination of the lower Bollinger Band and the 100-day average have done their job so far in offering a bounce zone. Now the question is, what is the trend of the dollar going to be going forward? And that's going to be the big question that's on traders' minds. We're still caught in a whipsaw in eurocurrency. What do I mean by that? Just take a look at how often you're going from the lower band to the upper band to lower band, and just churning this whole area. You, in fact, in the dollar index have been churning, and at least this was your first attempt at a breakout to the downside. You haven't attempted any breakouts that have had any merit in the euro currency. It's just a churn at this point in time. In the British pound, now I'm hearing that they're floating an idea of extending Brexit because the votes don't look there for Miss May next week. She lost a key vote on taxation today, although her party says it's not that important. Nonsense. She's not winning the day on this. That's a problem for her. You had an outside day down today, so what I will do tomorrow is take this arrow and have it point down, not up. Got it? I would say then you've got lower highs, lower lows. It's countered, though, because the bias of the market when you're over the 18-day average is up, and momentum is overbought. Still a confusing chart. In the Japanese yen, when you lost the run into the yen, the market has given up rather dramatically price. You do realize this high was 94.58.5. You're at 92 today, 16. So that, what is that? 200 and some odd points, 240 points. It's $2,400 in all of what? 4 trading days. That's quite a bit that the market's done, and I still have a target of price and the 18-day average potentially coming together. So something to watch about. What else in the yen? You know that that's a currency people run to if they're scared of everything else. Is tonight going to scare people? Who knows? Bitcoin. Bitcoin is getting into an area here where it's knocking on the door of being overbought. I consider any number over 70 in the slow stochastic on a settlement to be overbought. We're not quite there. We're knocking on the door. As you can see, it's settled unchanged today, having trouble getting to this upper Bollinger Band. It is consolidation, sideways consolidation, and out of that, the next trend I predict will take place. What it will be, we'll find out. Try to follow it. Here's Brent versus WTI crude, and you can see this market, when the Saudis and everyone else in OPEC said, no, we're going to start the production cutbacks, went from a differential of 761 back to 875, and it's staying above the 18-day average of closes. It's day after day of a rally, though, in this market. If you count how many days up in a row, it's rather, what, it's about 7 of them. Overbought, stretched out. Doesn't mean it can't go higher, but it is stretched. Where would you put a stop if you get long? That becomes one of the issues you got to ask yourself. And there's, under this scenario, other than being overbought, the trend's up and the bias is up. In the WTI, not quite as bullish as the Brent is there, but it has still got these days in a row of being up, holding on to that, overbought, not trending. Notice here you've got higher lows, higher highs. You don't have that in the WTI. So it's been a heck of a short covering spell. Now the question is, what's next? And as I saw, BP was announcing just over the past 24 hours that they have new technology where they're finding a lot more oil in the oil sands, and rather in the shale areas of our country. Oil sands are more, if you will, Canada. In looking at how the momentum's going in gasoline, notice how the 18-day average has become what we call that line in the sand, become the area where the market's trying to figure out what to do next. In natural gas, you still have the embedded reading. Until that reading is lost, rallies in this market, I continue to say, are going to be met with selling by the pros. You're on the verge of also getting what's called a bearish crossover, where the 18-day average gets underneath the 100-day average of closes. I guess we're going to have to keep our eye on weather, a lot of it. You know, one of the things I did today is I took the time out to write my first metal report of the year. It's my silver report. And I cover, obviously, the silver market in it. And you're going to see that I've covered it with the seasonal aspects of what takes place on a typical basis. Remember, past performance doesn't guarantee that'll happen again, but I discuss it in detail. I give you where I'm seeing the market. I didn't do a price count. I did the seasonal charts, though, with it, and I did a lot of work on weekly and daily charts to give you an idea. How do you get this report? Well, if you didn't get an email about it already, you're not going to. You've got to either call my staff, or you're going to have to go onto our website and sign up for the silver report, and then we'll put it in your hands. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.